And Singapore's inflation picked up slightly in April, but it remains tame by global standards. For consumers, prices are still rising slowly, and for policymakers, the outlook suggests more cooling ahead rather than a renewed inflation spike. While core inflation, which strips out volatile items like private transport and accommodation, rose on 0.7% year-on-year, which is slightly higher than economists expected. Headline inflation, which includes all items, was steady at 0.9% despite the small uptick. Both readings remain well below earlier highs and under 1% for the fourth straight month. Well, what this means for everyday life in Singapore is a relatively stable cost environment, especially compared to recent years when global inflation surged. Food, energy and transport prices aren't weighing too heavily on household budgets for now, but still there's caution in the air. The Monetary Authority of Singapore has already loosened policy twice this year and cut its inflation forecast to between 0.5% and 1.5%, citing slower global growth and the impact of US tariffs. Well, these international uncertainties could dampen demand and push prices even lower. From a global perspective, Singapore's situation stands in contrast to the sticky inflation seen in the US and Europe. But its reliance on trade makes it vulnerable to external shocks. Now, for consumers and investors alike, the message is clear. While Singapore's inflation is under control for now, it's not all smooth sailing ahead. Global trade tensions, especially those driven by the US, continue to cast a long shadow over Asia's financial hub. With price risks tilting to the downside, Singaporeans may get a bit more breathing room, but growth worries are creeping in just as quickly.